I think it was partial shock, but partial, okay, there was something like this lurking out there, right? I mean,
Mm.
crypto has been so unregulated for so long that there's inevitably going to be bad actors, right? And there's going to be things that are being done by a lot of CEOs that are so young they didn't go through past collapses. And so there's a tendency, especially when you're young, and I one day, once a long time ago, was young. Um, I thought I was invincible. I thought I could do anything. When I first started trading, I used leverage, too much leverage, and I got burned by it. Right. So I think part of it is that it's a really unfortunate scenario because people lost a lot of money, but at the same time, it wasn't a severe shock to me that it went on. Unfortunately, regulation at this point, right? And again, it's so weird because so many of the things within crypto were never let it be regulated. That's the worst idea in the world. And then you see something like this happen and people lost, millions of dollars. Many smaller accounts lost $5,000, $10,000. And now there's a real understanding of why you need rules, why you need transparency. Why is it so important that there are audits done and then the audits are released to the public? And I think that's going to be the key. Once you get transparency in the crypto market, big money will come back. And we've seen it from big names like Kevin O'Leary and Mike Novogratz and different players like that. They understand the need for crypto. They understand the need for Bitcoin, but there's no way they're going close to any projects now until there's that regulation. It will actually put in the bottom. So I think that's going to be the key,
Ah,
right? Is that, and the bottom's not going to be like a V-shaped recovery. It's not going to all of a sudden go just magically back to 69,000 or above. But what you're going to get is this beginning of confidence building as reports and transparency documents are released, where big money says, okay, now I feel safe to begin to invest millions or even more money. And that'll be a big change in the industry where all of a sudden imagine that pension funds feel comfortable enough to invest 1% of their assets. Right there, you probably have $100,000 Bitcoin price when it gets to that point. So that's going to be the key is you at this point, which is, again, it's so crazy because there were so many people that were just raging against regulation. But if you actually want crypto to go up, you now need regulation.
right.
Latest calculations I've done and analysis is that you're likely going to see the bottom around May of 2023.
Okay.
So the reason I came up with that is I compared the FTX scenario, the collapse there, to the Lehman Brothers collapse in '08 in the financial crisis. And there's a lot of weird similarities there. Lehman Brothers being a big bank, the exchanges are kind of like the banks of crypto, right? That's where you put your money. That's where you leave your money. A lot of them were paying different amounts of interest, if you will. So when that collapsed, just like Lehman Brothers, I looked at the charts. And what we saw is that the S&P 500 in 2008 took 6 months to bottom. It dropped another 40 to 45%. So I extrapolated that out with the FTX drop and said, okay, 6 months approximately and about a 40 to 45% drop in Bitcoin. It puts us right around $9,000, give or take, and it's right around that Mayish 2023 timeframe. So I'm going with that for now. And as we always know, there's new information that could come out, so it could change a little bit. But that's kind of what I'm zoning in on. Yeah, the rest of the year is tricky, right? Because as we come into the very year end, it'll be interesting to see, do you get Santa Claus rally, all these different things? But
Mm.
there's no doubt in my mind that we are going down in 2023. You have this confluence of negative issues that are going to emerge. Now, everyone's getting excited because the Fed is going to start toning back their rate hikes, likely a 50 basis point, then a 25, and then they're not going to raise any more. But they're not going to be able to cut rates until inflation comes down dramatically, right? We're talking 2%-ish again. I do think if the economy gets bad enough, they'd be like, okay, at 3%, we'll start cutting. But the problem is we're going to go into a recession. There's no doubt in my mind that we'll hit a recession. Maybe we're already in a recession, and they can't do anything. The market has been addicted to the Federal Reserve printing money to get us out of any tough spot. It was COVID. Before that, it was 2018 when the Fed, said, hey, we have to raise rates. The market dropped 20% in 6 weeks. They reversed and actually started cutting rates. They could do that because inflation was below 2%. Now it's above. They can't do that. So they're going to be handcuffed. I don't think the investing public understands that we could actually be in a recession that's an elongated recession that lasts for actually years. And that's going to be a shock when we start getting in that. And investors are going to turn to the Fed and say, hey, Federal Reserve, can you start printing money or lowering rates to get us out of this recession? And they're going to say, Sorry, we can't do that. Inflation's still 4 or 5%.
Right.
And that's the problem. Yeah, I mean, I think initially when we were at 69 and I said 20, I mean, that was the obvious pivot point because it was the 2017 high. Once we got down there, once I started to compare the crypto markets to the dot-com collapse, that's really where it started to be like, okay, Amazon and the dot-com collapse went down 95%. So, every past bear market with crypto has gone down 80 to 85. At 20,000, we weren't even down 80 to 85%. So as we got to 20, it started to make sense that we'd probably go lower than 20. And now it's looking like that 9-ish thousand area is the likely target.
Right.
It's definitely going to come down. I mean, so it's weird with the inflation rates because you're going back a year now. So what they do is they compare it to a year ago. Well, a year ago, inflation was already spiking dramatically. So the increase, and that's what we're looking at now, won't be as big. So just naturally, I think the PPI number just came out at like 4.9%. And so it's already showing that it's coming down. But what people have to understand is that doesn't mean where prices are dropping. They're just not going up as much. And that's still really, really hard for the markets and for investors to deal with. So I do think inflation comes down, but my guess is it's going to remain sticky at like 3 or 4%, probably for a few years, which again is going to make it really hard for the markets to kind of get out of a recession if we get in one. I mean, the thing is, it depends on where you're looking, right? So if you're looking at food, I mean, there's no doubt that in food's gone up 100% in many cases. Like, an apple might have been 50 cents. It's now $1. Definitely going out to even Costco. I go to Costco and the prices are dramatically higher. Definitely more than 8 or 9% rise in the prices of a lot of food goods. If you go to like TVs, you can buy like a 60-inch TV for like $300. It's amazing. So I think there's certain things that people don't buy on a regular basis that keep that inflation rate looking lower than it actually is. But it's always about food and energy, right? That's what the average person consumes. And granted, energy's come down, which is great, but that food is just being sticky at that high inflation rate for sure.
Right. And
I have next year priced in further downside in oil. So oil again is at this point, we're looking at it probably going down in the next few months to $65 a barrel. But I think by the end of next year, it's below $50 a barrel. And again, this is another call that I made earlier in like February, March of 2022. I talked about how oil was going to fall from $130 to like sub 100 by end of year. And the idea there was that everyone was saying it's going to 200 because Russia invaded Ukraine and all this stuff. And the essence of it was, even though that was a shock to the energy markets, it didn't compare to all the central banks raising interest rates, which then slows the global economy and makes people consume less energy. So I do think as we get into a recession, and it'll probably be a global recession, you will be seeing oil lower across the board. Yeah. I know a lot of people are very bullish on the dollar, but I think that we're at a point now where the dollar is starting to recognize that the Fed is starting to back off, and really not knowing how many more 75 basis points hikes they were going to do. That was really keeping that pressure on the dollar. Now we know that they're starting to talk back those hikes. They're not cutting, but at the same time, the markets will start to factor in a more dovish Fed. But I caution that they're not factoring in, the markets shouldn't factor in cutting rates. It's my goodness. So I go long and short all the time, right? Yeah. So I mean, I'm looking to short the markets into year end. I'm kind of hoping for a year end rally because I want to get better opportunities on my shorts.
Yeah.
But yeah, I think that this is a market where it's so volatile that swing traders are just having a field day. Like this is really, it's been the long-term investors market where the Fed has always been there to bail everyone out. And then so long-term investors could just buy any dip and hold. Well, guess what? Now the Fed's not doing that. And so it's going to be what we call a swing traders market. There's millions and millions of dollars to be made by just going long and then selling on the pop and then shorting and buying on the dip and doing all that kind of stuff. But it's a nimble traders and investors game now. I think the sentiment for the most part in the markets overall is slightly optimistic, right? And it's just changed recently because the Fed has started to be a little bit more back offish on their hikes. On the swing trading side, I mean, any good swing trader tries not to have too much of a bias because we just like play price action. So if something pops too much and goes into resistance, we're shorting it. And then the next day we might cover our short and go long if it falls a bunch, right? So that's markets offer the best opportunities. Like literally, I mean, look at Bitcoin, right? I mean, there are people that buying Bitcoin at 65, 66, 69,000. And here we are in a bear market and you can buy it at 17 right now and probably cheaper. So always remember that while bear markets can hurt, they do offer the best opportunities. And you could go back to like the financial crisis in 08, 09. In March 09, there was like, I mean, you could have bought Bank of America for like $2, right? And I mean, just incredible levels because there was so much panic and so much uncertainty in the markets. And obviously, we know where those stocks are now trading. It's been an amazing run, and there were so many stocks like that. And so, bear markets again, when panic hits, people sell first and ask questions later. If you can be a level-headed robotic trader or investor, you buy that panic and then enjoy the ride.